All right, in this video, I'm going to be giving you guys 3 reasons to buy real estate before the end of the year. And then I'm going to be giving you guys 3 counter arguments to those reasons. So you're going to have 3 reasons to buy, 3 reasons not to buy. And investing's subjective. It's not a one shoe size fits all. So I'm going to give you guys both sides of the coin. And then you can make your own decision on what it is you want to do. So number 1 reason why you shouldn't buy is we're on the brink of what could be a nasty recession, right? Unemployment could go up drastically. People can't pay, they lose their jobs. People can't pay their mortgages. This causes a lot more supply to flood onto the market. And obviously, price drops would follow, right? So the first reason is obviously prices could go down further, right? They could go down a lot further. Second reason is it is substantially cheaper to continue renting right now than it is to actually purchase a home. Like my house, my mortgage is like $5,500 a month. Think if I were to rent it, it'd be like 38. And then if you rent it, you don't have to pay property tax and maintenance and all the other things. So you're probably saving like $2,500 a month renting a detached home as opposed to actually buying one. However, today, if I were to buy that house, my mortgage would be substantially cheaper, probably like, I don't know, $1,200 cheaper or something like that. So maybe not $2,500, but well over $1,000 a month you're saving by renting. And then the third reason why you shouldn't buy real estate is the government has basically done everything they possibly can to make it unprofitable, right? Capital gains tax, the flipping tax, the increasing the notice that you have to give a tenant to, well, they increased it to 4 months. Now it's 3 months again. And they've just basically made it very unfavorable for investors. Obviously, if you're buying to live in, you know, a lot of this doesn't apply to you, but if you're looking at it from an investment standpoint, it's cash flow negative most of the time. You know, 95% of the time it's cash flow negative. And then when you go to actually sell, you're going to have to deal with the tenant that likely isn't going to leave. And then you have to try to sell it with a tenant in there. It's not going to show as nice. And then you have to give the buyer basically 4 months before they can move in. It's very hard to find a buyer to do that. And at the end of all of this, when you sell, there's a 67% capital gains tax inclusion rate now. So if you look at it like that, those 3 reasons, buying real estate, very unattractive right now. Now, the 3 counterpoints to those 3 reasons. I'm actually going to go ahead and switch hands here. My shoulder's getting tired. So number 1, right? Prices are going to go lower, so you shouldn't buy. So here's the thing, right? There is always going to be something to be scared about when it comes to buying real estate. Always. There's never a time where there isn't something scary down the pipeline that could possibly happen, that could come up and crash the market, right? I remember back in 2020 when we had that initial market collapse, people were saying prices are going to go way lower. People were dumping real estate. Nobody was buying. That ended up being the best time to buy ever. You know, in 2021, not even towards the end of 2021, but at basically the beginning of the bull run, people were calling for a crash, saying this is crazy, prices need to come down, blah, blah, blah. And we're still nowhere even close to those prices that we saw back at those times, even with the correction and interest rates being this much higher. So it doesn't matter, you know, what's going on, how good things are. There's always reasons why the market could crash. My second counter argument to that is, you know, if you only want to buy assets while the price is going up, you cannot call yourself an investor. That is not how you invest, right? And especially in real estate. Once you wait for the prices to start going up again, you have to understand the conditions that exist for prices to be going up is multiple offers. It is urgency. It is FOMO, because the prices can't go up until homes are basically getting bid up over their asking prices in multiple offers. Then what ends up happening is the next comparable home that gets listed on the market after that sale will price their home higher because the last sale sold over its asking price. So if that one was listed at 500, it sold for 520. The next home that comes to market might be 529 or 535 or something like that, right? So when you're buying in a market where prices are moving up, you're likely going to be in multiple offers. You're going to be writing subject free. You're not going to be able to safely do it with financing and inspection. And by the way, right now, if you're buying a home, not only are you negotiating off the asking price and no competing offers and have a ton of inventory to choose from, every single inspection report I've had in the last 4 months, I've then been able to negotiate an even bigger discount than we already have off of the asking price because of things that were found in the inspection report. Not only are you likely not going to have an inspection in a hot market, you're definitely not negotiating anything that was found in that inspection unless it was something drastically wrong with the property, because the seller knows there's 5 other offers waiting to buy this property if you decide to back out, right? So first thing is that if you're trying to buy assets that are only on the way up or expecting them to go up the next day after you buy it, you are going to constantly buy high and sell low because you are buying out of emotion, not logic, right? So number one, just because an asset goes down in price after you buy it does not mean it was a bad buy. And in fact, my most successful investments, pretty much all of them, have gone down first before they eventually retraced and went higher. Secondly, the rent thing. Yes, it is cheaper to rent. However, rent goes up, mortgages go down. I don't care what anybody says. Yes, there's been, for the last year and a half, a time period in the last basically 20 years where mortgages didn't go down and they went higher. However, if you account for the loss of value in the Canadian currency, mortgages actually didn't go very much higher. And that's the thing, is that rent goes up, your mortgage stays the same, or it goes down. And right now, the chance that it's going to go down is far higher than the chance that it's going to go up. And even if it stays the same, it's still going down because inflation chips away at the value of that mortgage payment. If inflation's at 3% and you have a $5,000 a month mortgage payment, that mortgage payment is worth $150 less next year. Yes, the payment stays the same, but you're paying it off with cheaper dollars. So you get in today, well, sure, maybe you're saving money on rent, but if you were to say get kicked out of that rental in 3 years, rent would likely be quite a bit higher in theory, and that mortgage payment will be the same or lower, whereas your rent is obviously higher. So if you continue to rent and you rent for a couple of years, you're rolling the dice, so to speak, hoping that the situation isn't going to be much worse for you 3 to 5 years down the road. Whereas on the mortgage side, it sucks today, but you pretty much know it's going to be better for you 3 to 5 years down the road. So you have some certainty there. And the last one, what was the last one again? The taxes. The taxes, the rules, all of that stuff. The price of real estate, in my opinion, will go up to compensate for all of these things. When you tax a business, and yes, real estate investing is a business, no matter what anybody says, it is the exact same thing as a business. You buy it, you get cash flow, you get an income, and then when you sell it, you have capital gains tax. It's exactly how a business works, right? When you tax businesses, the increased cost that the business has to pay gets passed down to the consumer. Otherwise, there's no reason to run the business because it won't be profitable. That being the case, what is likely going to happen from this capital gains tax increase and all the tenant rules and blah, 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 let's just say you were making $100,000 on your property before and you wanted to sell it. And you only want to sell it if you're making $100,000. Well, now with the new capital gains rules, you're no longer making $100,000. You're making, $70,000 or whatever it is, right? Because you got to pay more tax now, right? So what investors will do, and I know this because I talk to sellers every freaking day, and everybody thinks like this. Everybody thinks like this, right? They have a number in their head. It doesn't matter that they're making money. They have a number. That's the only way that they'll sell. What they'll likely do is they'll hold on to those properties until they get that amount of money that they initially wanted to sell for in the first place. Meaning, people will hold on to properties, supply will drop, and then eventually, once the prices of properties go up, that's when those investors will consider selling those properties, right? That's going to take time, 2 or 3 years, right? But you'd probably want to be in before that repricing of the assets happens. So that's my 3 cents on this. You can take it for what it is. You can make your decision, right? Maybe it's too stressful for you to buy if prices are going to go down after the fact. It's always going to be like that, you know? And it's like, I talk to a lot of people in their 40s and 50s. They all say the same thing. Oh, when we bought, you know, everybody called us crazy, said it was too expensive, prices would never go higher, and now my $150,000 detached home is $800,000. Everybody says the same thing. I hear it time and time again. Anyways, for early access to pre-sale deals, I got the pre-sale newsletter. Click the link down below. Thank you for watching. I'm that Agent Kelly. I'm making moves to move you.